Good morning, everyone. Welcome to Apple Markets. My name is Chris. Thanks for joining us in this live webinar where we take a look at the markets, of course, and charts. First of all, though, before we dive into that, be aware that this webinar is shown to a global audience, but may not be suitable for you. Take a look at this link, applemarketsglobal.com. Select your country of residence and contact the appropriate entity to find out more about that and other conditions and details. Also, please be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice, it is for informational and educational purposes only. If by continuing watching this webinar, you agree with this disclaimer and you're aware of the risk involved when trading. All right. Thank you for your attention on that. Hope you had a good weekend and that you enjoyed perhaps the good weather, depending on whether you're the northern hemisphere or southern hemisphere, I guess, but most of us should be heading towards summer. And I'm enjoying the nice spring weather. We had good 2021, nice and sunny today too, but it seems like there's going to be some showers coming towards our direction here in Prague. But yeah, generally speaking, a lot better, of course, than winter, for my opinion. So very happy about that. We are going to take a look. Enough chit chat. Let's take a look at the calendar, and we see some news events like the pound tomorrow. There's also a big pound event. I think it's the interest rate, if I remember correctly. Balance of trade, pound and the euro, and some lighter medium news. As you can see, you can find that just by going to analytics and going to Forex calendar. We also have a heat map. We've got a lot of things actually on our website. As you can find here, analytics, you can see, all kind of analysis is here and extra tools that might be useful. We see some stocks up in the green and in the red. And let's take a look at the currency pairs. We see yens, especially here on the heat map. This is basically showing volatility versus range movement. And we see a sturdy upside on the dollar yen, CAD yen, Swiss yen, euro yen, etc. We see some New Zealand's here as well on the downside. The pair that moved the most, New Zealand and pound, basically dollar, basically back to its traditional role of the last few months with low movement. Alrighty. So I think relatively clear-cut situation here looking at currency pairs. Later on, we can take a look at some commodities and some indices. By all means, if you have any preference for any of the instruments that you would like to take a look at, just let me know through the chat. We'll start off with the euro dollar weekly chart, and that's of course a very simple, very clear candlestick pattern message, and that is a pin bar, bearish pin bar, strong wick, or big wick, I should say, candle close very near the low, which means that the bears were in control at the end of the week, and the candle close on top of that was below the close of the week before. So this subscribes to a classical pin bar, very good pin bar, and it also happened after a decent run up. We had a euro dollar uptrend here. You can see moving up some 1,000 pips from 105-ish up to 116. So, we had this uptrend channel. In fact, we can connect these bottoms like this. And you can see that that's the kind of channel we've had ever since the double bottom, right down in here, somewhere in November, double bottom. And we've been riding this uptrend channel slowly but surely. On a weekly chart, it looks a bit corrective, doesn't it? But obviously, if we zoom in, we'll see a stronger trend occur. That has been dominating 4 months, and we hit 115, 117 resistance zone, and we're showing a strong bearish pin bar. So I think it's pretty simple to read. I think it's pretty simple. That's a bearish signal. I don't expect that last week's high to be broken anytime soon. So I think it's a good stop loss level right away, and I think that it makes sense to look and hunt for shorts just based upon that, and of course the whole pattern, the sense that we had three-wave correction. If you like waves, this could be your ABC correction. We had decent momentum to the downside here, or not decent is understating. We had great momentum to the downside. ABC pattern, a 38.2 fib, retracement, respect. This could be a double top. So there are a lot of things that confirm, I would say, a potential turn. Now, if this is going to be invalidated, I would need to see price basically just break above here, and then things are different. Then this is maybe just a pause. It's for whatever reason. It's not the signal that that it conveys. It could happen if, for instance, a couple of weeks go sideways like that, and for whatever reason we have maybe, for instance, the British referendum, right? That's a big news event, a lot of volatility, and all of a sudden it shoots up like that. I mean, I wouldn't, obviously, this can happen. This depends on the next few weeks too. But at this moment, it doesn't seem that it was likely. But it's a backup scenario that could unfold if you get those couple of weeks sideways, for instance, or if you see price do this, for instance, right? You see it move down, but then still bounce off support, and then kind of make a triangle like that. Well, obviously, a triangle can break to the upside, and then of course there's the potential to move up to the 38 or the 50. But that's for later on, something not to worry about now, I would say. So from that perspective, I'm expecting some downside momentum. Now, there's obviously a lot of support levels that could stand in the way and are good to think about, or to have at least on the chart to consider, because those could still be bouncing spots to the upside. Here on the daily chart, you can see a daily pin bar, by the way, too, right? After this run up, strong reversal signal, we talked about that last week, and you see a couple of down days like this. Now, what kind of support levels are important to consider? There could be many, in fact, so I might forget or miss a couple here, but obviously down here, very important. Let me make that green. Far away, but a lot of hits, right? A lot of levels, a lot of times price stopped at that level around 108.25, 108. We got this channel, so it's not a perfect channel, but kind of cuts through this. But on a weekly chart, it looks good, so that could still be something to reckon with. We got tops and bottoms around here at 101.12.25. This is 23.6 fib resistance, but now it could be support. That's something to deal with and reckon with. So I would say those three important levels right there. Now there could be more. I mean, you could start discussing the value of maybe 110, obviously psychological level. So let's add that 110.50, 110, because there have been also levels that were respected here as well. So let's add those, and let's leave it at that for the moment. I think that at the bottom, obviously, right? So, all right. So got our support levels. We have resistance, clear resistance, the channel, and support levels. So this is our playing field in a way. This is kind of our roadmap for the moment. And as you probably have heard from me before, Forex traders are roadmap readers, right? In my opinion, our task is simple. We are reacting to price, not trying to predict it, right? We want the market to decide. I am basically not controlling the market. So the market is going to do what it wants to do. So what I'm trying to do is analyze what is the path, what is the most likely path that the price is going to make? Where is the least resistance? So accordingly, then I'm going to make my trade plan. So if, for instance, at this point, right, it seemed likely to me that there's a strong resistance zone. It's going to be tough for price to go through it in one shot. So the path of least resistance at that point is that it's going to turn in this zone. So that's not I don't necessarily want to predict that. I just want to react when it happens. So a pin bar like that is obviously a great signal, a great confirmation of that analysis. Right? So where is the most open zone? I would say, because that's of course the most interesting. When you analyze and you look for the path of least resistance, you're always looking for the biggest spaces, because that's where price has the most potential to make momentum. So I see space below 112.25 down to 110. I see space here and I see space here. Those are the biggest zones where price could probably make the most momentum. Now there is a bit of zone here. It's not, from a daily perspective, it's not grand, but could be worth looking into for intraday trading because it's a small zone, right? You can see the difference between current price and the pink line here, right, or the magenta line is about 70 pips. So a smaller zone. So let's see and dive into the 4-hour chart. All right. Now we can see that there is, on the daily chart, by the way, one more thing. There is divergence, double divergence, right, between these tops. We have the single first divergence here, and then the second divergence here. All right, so from that point of view, a bearish retracement at minimum is kind of like, would seem a minimum, right? At minimum, an ABC correction. If not, a big 1, 2, 3 kind of breakout. Or that doesn't have to be quickly. Don't forget, from a timing perspective, the turn, if this is a big bearish turn, it could take several weeks, even up to the British referendum. We could have a break and we can get a long pullback and then we can get the down move. And that could take weeks like this, just to stretch the turnaround. All right, so divergence, double divergence on the daily chart, another confirmation. And last but not least, there is, I would say, let's see how things go, but there's a potential, let me just move this a bit down, there's a potential that it moves down lower like this, bounces off, and you get a head and shoulders like that. It's well set up because we have double divergence, but we also have a head that is just a bit above the left shoulder, so it sets us up nicely for right shoulder. All right, so let's see if that happens. That's another thing that could develop, a head and shoulders reversal pattern. Let's dive into the 4-hour chart to see if there are any trades from here down to, let's say, 112.50, 112.25 support levels, and perhaps the trend line at 113.25. All right, so 21 EMA is bearish at this point, as you can see, and we're riding momentum to the downside here. A bit of slowdown on the 1-hour chart. We can see that a bit better. Right here, you can see this is more of a sideways move. So what is needed for that break to the downside? I think it's pretty simple. I think a support trend line right here connecting these bottoms is clearly visible, and we have some resistance lines as well. Let's put them on. Let me make this purple. All right, so we got that, and we got that right here. All right, so we have the purple lines there as resistance. And support line right there. So in my opinion, pretty simple. I guess relatively simple. We got a break of support. That could be a breakout down to that level and perhaps an extension down to the next level. Or if price does break this particular resistance, the first resistance, I would not be interested in longs, but I would be interested in seeing how far it could rise and see if it could turn at resistance up at the purple or red line here, right? Anywhere there between 114.50, 115 for a turnaround. So those are, I would say, the potential bearish trades for today, later this week, on the euro dollar. That's my roadmap, as you can see, using these lines and the bigger long-term picture. So how is a break confirmed? Well, I would say 1-hour chart, if we get a breakout candle like this, for instance, and then a bit of a pullback back to the green line, that would be one way of catching it. If we get a break to the upside, for instance, wait for engulfing twins or some bearish candlestick patterns up in here for the reversal. So that's about it regarding the euro dollar from my perspective. Last week, by the way, excuse me, last week we had a good breakout candle here. I think we were talking about a triangle. That breakout candle did lead for a decent move down. So something like that, for instance, here or here would be, I think, just as good, just as valid for this week. All right, so that's basically my lines in the sand, my roadmap, right? And now I'm waiting for price to react to that. I'm waiting for price to make its decision, and I want to ride along with that wave. I want to ride along with that, with the big boys, right? Basically. So I'm not going to push I can't push the market myself. So I want to wait for that price action to see what direction at my decision zones is going to happen. So if you have any questions on that, let me know. But otherwise, I'm going to move on, and we're going to take a look at pound USD. And you can use pivot points, by the way, for more confirmation, obviously. Perhaps I can take a quick look if what those pivot points are, just to get some confirmation. 113.91 is a pivot point. That's actually right here. All right, 114.13. Well, yeah, you get the point. You can always use pivots. You can use anything, of course, to make confluence as you like. And maybe you see something that's interesting, just let me know. Maybe I can add it and we can see if there's confluence. But this is basically what I'm looking for. You could even add a fib. Let's see. Probably doesn't give much confidence actually. But anyhow, the 23 or the 38.2 fib could still be resistance spots. So moving on, let's take a look at pound USD. All right, that's kind of the same channel, and it's bouncing off support too. It's kind of wacky price movement here, up, down, pretty choppy. That too, looking for support or resistance in this channel. We got a bit of a smaller line here too. Right, a bit of a support line. So a break of that support line could be an interesting breakout. That would probably break this channel too, and we could see the breakout right here. All right, so that's interesting potential right there, or back to the top of that channel for a turnaround. It's basically, simply put, the same kind of structure, I would say, as the euro dollar. Right, we had a break of this channel, and we're in a downtrend at the moment on this 1 hour, 4 hour chart. I mean, even on a weekly chart, we're in a downtrend still. We actually hit resistance trend lines. We hit resistance here, and we showed a bearish candle last week too. It's basically the same picture as the euro dollar. Weekly bearish candle, daily bearish candle plus downside. Now the upside channel is not as strong on the pound as the euro, but there is definitely a channel to the upside. As you can see, there's this up momentum, of course, that happened too. Looks a bit more corrective, and we hit resistance and turned around. So if we dive back to the lower time frames here, maybe the 4 hour chart just quickly, you can see that if price manages to break below those support levels, there could be this breakout trade on the pound USD to the downside. All right. Now, if price breaks above this channel, then this could be a bouncing spot just because we are at the long-term moving average, and price could retest the resistance levels. What kind of resistance levels could be interesting to keep an eye on? Let's take a look. I am double checking. Let's take away this one. All right, and I would put a fib from here to here. Upon the break of the channel, I would say that if the pink line breaks here, right, I wouldn't be too worried about the 38.2 fib, but of course that could be a small bouncing spot, and probably deeper fibs would be more important. yes, the 50 could be it, but most likely I would say my guesstimate would be these fibs would be the main levels I'd be worried about for a turnaround back down. So ultimately, I'm looking for downside here or within the channel. But if it breaks the channel, then I would actually turn slightly bullish and look for intraday longs upon the break, after the break, on a 4-hour chart with a good candle above it, up to those fibs, and then be bearish at these resistance fibs, actually. So, I mean, I'm not a trader that uses pending orders, and I always actually forget to, talk about it because I don't really use it too often. But if I would use any pending orders, then I would probably be inclined to put somewhere a pending order at one of these fibs or both fibs on the pound. On the euro dollar, I'm not sure if I would. I would probably just keep an eye on it and track it as it develops. I always like that a bit more, but all right. Dollar yen last week made a small upside here. Dollar strength just as against the euro and pound. And we saw the continuation last week. Finally, we saw price respecting the resistance line here, making a dip and then breaking. So anyone who was looking for a candle break, a good candle break, that could have been it on the hourly chart right here. And we got a good momentum continuation. Or the 4-hour chart, we got it right here. All right, so that's continuing to the upside and is riding on nicely. So anyone who's still in that, that's great. If not, anything to be traded at this moment on the dollar yen. Well, we had a good daily candle, so I would say any retracement of that daily candle could be interesting. But it looks like we're not retracing, it just keeps pushing up and higher, so I don't think we'll get a retracement of that. It could still happen, but doesn't seem very likely at the moment. Now, obviously, you might say, hey, is this not a downtrend? And yeah, it certainly is in a bearish momentum. We've had a lot of downside actually last few weeks. Let me go to the fib 1 second. Right, a lot of downside. And I was one of the first ones to, I think, first ones at least, in my humble opinion, to say this is probably going to be over. We have divergence, wave 5 of 5. We should see a correction down to these fibs. That was back here. So that downside has lasted long. Now I personally, after seeing last week's bullish candle at the 38.2 fib, wouldn't be surprised to see a bit of a rally, or at least a retracement, but maybe even a bigger turnaround. But that still needs a few weeks. I would like to see 5 to 6 weeks, not 5 to 6 candles not breaking this low. That would give me a bit more confirmation. But for the moment, I do think at least a move up to retest resistance is very likely. Now the thing is that was a good breakout trade. Even a hook back is still good. But are there any good trades from here up to this resistance? Because that's the target for the moment. It might, right? It might break above that. But at this moment, I would not assume that. At this moment, I would say there could be continuation up to that, a hook back, an inverted head and shoulders potential, a weakness here on the right side. We see a dip basically for then a rally. That seems the most likely at the moment to me. This kind of up, down, up. And then a break of the neckline, break of the resistance, and a bigger rally off of the 38.2 fib, right? Now, if that could be wrong, not wrong, but it could turn to be that could turn or become different if price kind of moves up correctively like this, and then it shows a strong downside and then a bear flag. Well, then I'm bearish. Break of that, we can move down to the 50 fib, right? Great. Obviously, that will change if we see price action reacting in a different way. All right. So, but for the moment, I think 38.2 fib bounce is the most likely. So anyhow, back to hourly. Is there anything to grab up to here? And Well, let's take a look at the 4-hour first. I don't like it right now, personally. I would rather wait for retracement. It's at the 61.8 target. It's at a long-term moving average. And I would probably rather wait for a bull flag like this. Bull flag pattern and then a break of that. That would be fine. For breakout after the bull flag, that's fine. Or even a zigzag correction like that and a turnaround, anything like that, anything of a correction for upside. Now, if price really starts to move fast down like this, then it's a different story, and I would just wait and see because then I'm not really interested in both sides. So, all right, let's take a look at the Aussie. So the Aussie last week retraced the breakout candle, respected it halfway. We were talking about that potential, and then started to move down, and it's still moving down. All of that downside has happened after that breakout trade that we discussed last week, which is great, and it's still taking place. So, is there any potential add-on or something like that? Let's talk about that. It basically yesterday I was saying that it was at the. Let me take a look where it was exactly. Here, I was looking for a pullback up to here. That didn't happen. We got a continuation actually instead. So let's talk about this a bit more. Let's see. We got support levels coming up. I'm inclined still to wait for the retracement as I said yesterday. We see maybe a first sign, maybe with big emphasis on maybe, of a potential retracement. I would like personally to see some retracement, some bull flag or an ABC zigzag, and then trying to trade the end of that pattern. Yeah, I don't think that's I don't would not like to trade it otherwise personally. But you can see the value of the 21 EMA, by the way, again when trading the breakout potentially here. If you just basically look at the 21 EMA, how it keeps bearish as this keeps falling and falling, and still is bearish actually, right? Then it's a great trail stop from that point of view. At this moment, I would, if you're in that trade, I would probably put the trail. If you're in a trail, then above these tops, I would say. Right there. All right, because we got double divergence in the meantime on the Aussie between these on the hourly chart. Looks a bit like a rising wedge that was broken. Sorry, a falling wedge that was broken. And we broke that falling wedge. So I wouldn't be surprised to see a bit of a retracement rally up to resistance. So very aggressive traders, and I don't consider myself that, but might even, I know some traders that would even maybe attempt to take a reversal trade on this. Now, double divergence is a decent signal. What I dislike about it is that it's not happening at a fib. It's kind of in between these fibs. If it would be at least a strong fib that I would like as an extra support, that would make things a bit better. At this moment, I think it's a decent chance it will make a retracement up to this level, but seems a bit shallow or seems to, I don't know, it doesn't seem enough confidence for me to be really excited about taking a reversal trade itself. So, but I mean, very aggressive traders might consider these couple of bullish candles already enough of a turnaround, right, to attempt a long. But I'm not one of those. Anyhow, so those are the majors, I would say. Does anyone have a preference for any other currency pair at this point? Do you see anything that you would like to discuss? We'll take a look at them anyhow, most of them. But if you have any preference, let me know. Remember that it's trades like these are not very special, I think. I mean, um, when it boils down to Forex trading, I think there are a lot of setups, and it's actually a lot easier to take setups than to wait for setups. So patience, consistency, discipline, a lot more easier than jumping in trades, in fact. So, not that this is a bad setup. I'm just saying in general, that there are a lot of setups, and it's, I think, probably more important to be critical about the ones we take than too easy on the ones we take. Now it depends. Some traders have problems with jumping in a trade, with taking a trade, I should say, right? So they overthink things 50 times before they actually take a trade, and it could be too late. You got sometimes traders are like that as well, but most traders, I would say, are the opposite almost, right? So um, it's different. It's not easy to find a balance, but one day, with experience, it gets a lot easier. All right, euro pound. Let me use this is pretty pleasant. The black and white candles, because I already use a lot of drawings and I use a lot of colors already, so I think it just becomes a bit too messy. Makes it a bit clearer, I think. Um, let's take a look at. I don't look that intensively at the euro pound, so let me start from scratch here. April was bearish. Two big bearish candles. I think there's a decent chance that this momentum is over to the upside on the euro pound. Now, when using my, time factor rule, that would mean this and next week. This week is important. If this week is uh, is bearish, there's a very good chance that this momentum is over. If this week is bullish, then it depends on next week. That's my rule of thumb. But I think at this moment, it looks like a decent chance that this momentum is over, upside, and we could see a bigger correction, either ABC or even more momentum. I don't know, but an ABC seems most likely, perhaps. So we can put a fib like that, then we could see maybe price stopping at these fibs to go down to these fibs and then bounce again. Okay, it's a bit of a mixture, and sometimes, if there's too many contradictory signals, it's gonna be good to skip. I see good momentum here, as the weekly candles would suggest, but I see good momentum here too, and it looks like five waves too. So what could happen is, and I don't want to throw too much Elliott wave stuff at you, but what could happen is that this is a one or A, this is an A probably. This could be a B. We go up for a C, which can complete a 2 or B, and we go down for 3 or C. So ultimately, probably this top will be broken before this bottom gets broken. So we might see a bounce, for instance. Let's see. This could get complicated on the euro pound. We could see price dip down to the 61.8 fib before it rises up to the target before it dips down again. So if we look at this particular part on the hourly chart and start putting a fib from this to this and make the fib a different color so we can see the differences. Then we see that this is a big consolidation, which could make a lot of sense within the ABC blue, right? Within the blue B, there could be a ABC red. This downside was A, there was momentum, and you can see that 21 EMA was guiding it, just like the 21 EMA was guiding the A. The B is choppy, so you see the 21 EMA kind of back and forth, bull bear, bull bear. So the break here, it's a bit choppy though. It doesn't look that neat, but basically the break of this roughly, as I said, it's not an easy trend line, but roughly of these trend lines, I could see the fall down to 78, 50, 78. Now that's not a trade that I think is very interesting to trade from a swing perspective because the zone is very small here. It seems more interesting to look for probably for a bounce than for the breakout here. Now, if price breaks above this resistance trend line, the pink one, then that's my invalidation level. I would say in that case, this is the correction somehow, and price is making a breakout to the upside. All right, so that's the pink breakout. The pink line, the break of the pink line, we got a breakout, a bullish breakout, break of the purple lines, we got a bearish breakout, and we can complete that ABC zigzag, and I would expect some bounces right here for turn back up. So that's my 2 cents on the euro pound. Let's see. It's a I would say not the easiest one to read at this moment, personally, but good. So, but generally speaking, I think that the market is obviously it's always difficult when it's in transition. You got a strong upside, and then you get the reversal, and then there's always it begs the question: is this a retracement for more upside, right? Or is this really a reversal? And those are always tricky, and it's not easy. I mean, we got some good trend lines to work with, I think, so it helps us. But generally speaking, this is always just a difficult part when you get into situations like this. I mean, you had an uptrend, but you bump into strong resistance, right? So you got a good uptrend, but you bump into strong resistance. Price reacts to it. You get good momentum, but still, this could be a retracement, or is it a bigger reversal? And I think that the reversal is a bit more likely, but it's always tricky with these things. So looking at the trend lines, looking at fib levels, looking for breakouts, we have to take it step by step and just read how it goes. And this could definitely change as time progresses, right? My long-term view. Who knows? Price could just, as I said, price could just go sideways, or make some downside and then go sideways until the referendum. I don't know. Maybe I'm exaggerating the influence of the referendum, but that could be the moment where price kind of stays quiet, relatively quiet on the long term, before you get the bigger downside. I would expect downside, but that too is dependent on how price reacts to support and resistance. All right. Anyhow, so dollar CAD, we finally got the break. That really, really, really took long, didn't it? We talked about it for centuries almost, it feels like. But we finally got the break of this falling wedge. That was part one. I didn't trade it, didn't like it anyhow because it took so long. And, it failed a couple of times before. Reversal trades seemed very risky. But this time, for any daredevil that did take it by any chance, that was a good trade that went strongly to the upside, actually broke this channel, at least the daily channel here, to the upside. Could be drawn just a bit better, I think, like this perhaps. Yeah, anyhow, that was broken too. But I don't know. At this moment, there's double divergence, or at least single. I should say single. A bit of a wick here. I don't see anything to trade on the dollar cat. Very simple. I would just wait, put it in waiting mode. Nothing to add. If you want, by all means, you can send me a screenshot with the trade idea that perhaps you like on the dollar cat. I mean, maybe I'm missing something, but So by all means, you can send me screenshots, of course, but I'm not a fan of it. So let's move on. Pound odd. Well, last week we had, let's see, we had this particular fib that went and guided the continuation, if I can put it on finally. There we go. Okay. And price making kind of a range sideways box, breaking that eventually and continuing higher. So anyone who took the breakouts, I don't know, it was probably difficult to trade. It was a pretty big candle. So anyone who took the breakout with a pending order could have done well. Anyone waiting for a candle, probably a bit on the late side there. Double top at the moment. Double divergence on the 30-minute chart. There's been a great rise of momentum, and of course the trend change clearly pushing higher, quite high. As you might know, Beverly made a lot of flips to the downside, right? So it's funny to see such a reversal, but of course this was bound to happen at one point. And Beverly made a great amount of flips from here to here, roughly. But now we can see momentum really, really just closing and reversing in the other direction with strong daily candles like this. I'm not a big fan of going long right into the same thing with the other Aussie. I think it was. There was another pair that, yes, we got good momentum, but I'm not sure if this is the good spot to go along with divergence, long-term moving average. I think the what I would like to see is price get back into that supply and demand zone here, right here. If price could retrace there, I would be interested in looking for longs. Pretty good zone, I think. Good momentum prior to it, good momentum, decent momentum after that. I would look actually probably for the lower part of that zone, which is roughly around 193, 193.50. Stop loss below 193. Conservative target probably a 3-to-1 ratio, 3-to-1 R2R. Okay, that's probably the only thing I would see at the moment. I'm not looking for any downside trades, not with this momentum. I don't think it makes sense. Yes, there are some signals that it might be, over. I'm sure aggressive traders, as I said with the Aussie, would be maybe even trading this to the downside, considering the engulfing twins that we had here at double top. And I understand that. But I personally am not. I take some reversal trades, but I like to take them when there's more confidence. And you might say, even more confidence? That's fine. But for me, yeah, I am picky with reversal trades. I do require even more elements than what we've seen so far. So that's just my opinion. Now, it doesn't mean that this reversal trade would not work, or it doesn't mean that it could be good, but that's just my approach. Kiwi dollar. Same like the Aussie. Momentum riding it, but correction taking it higher. Weekly chart. Also that trend channel, just like the euro dollar, but that trend channel is broken. Engulfing twins last week, and really a weak kind of correct. Looks very corrective, doesn't it? On the weekly, daily, we see the break of this channel. Four-hour chart. Well, let's put a fib on this swing high, swing low. double top at the 272 targets. All right. Alrighty, now let's see. I think there are two scenarios. One is we completed 5 waves here. One is we have an ABC zigzag to basically retrace that and then turn. The second is we extend this momentum further down a bit. How far? Good question. We might, for instance, move down to the minus 61.8 target. All right, so somewhere in here, for instance. That could be an extension. So if it's an extension, it could be interesting for intraday trading to catch the breakout right here. So a breakout could occur obviously when you're pushing through this bottom, this mini bottom here on a 50-minute chart. We might see that a bit better. There is a kind of a small bear flag at the moment. Just like there was here and perhaps here. So that's one scenario. The other one would be an ABC zigzag. For that to happen, I wouldn't trade that. I would like to see, in that case, the only thing that would make me want to trade that is there's momentum here, and we see correction, and then we could see the continuation of that zigzag. Now, how does that stack up with the Aussie? Let's take a look. The Aussie might be making that retracement. So the Kiwi at this moment looks a bit weaker in its upside than the Aussie. But if the Aussie does move up, then the Kiwi will probably follow a bit as well. So let's see how that unfolds. Pound is also moving up to the top of the channel. Pound dollar, not breaking those support levels. And euro dollar is also not breaking those support levels. And in fact, you see the 21 EMA turning green at this moment, indicating that the momentum is turning back up. So, the breakout trades that I was talking about do not seem to be happening, and we're getting a bit of a bullish bounce on these pairs, or better said, bearish bounce on the dollar. All right, now the Aussie is moving a bit faster, so perhaps the Odd New Zealand is moving up as well. But who knows? Later today, it doesn't mean that if it does break through this level, it could do that later on today, perhaps. And if it does, then there is a zone with about 75 pips. Not a big zone, so it's more of an intraday potential. Okay, if you have any questions, let's see. RGR TP 6565. That's probably on the Kiwi. Let me take a look. Daily regression, maybe? I'm not sure. 6565. That's here. That's the minus 1,000 target. There's a bottom here as well. And yeah, it could extend to that. If you look at the daily, then we have momentum riding it. And there's nothing to say that these daily candles could just keep appearing like that. Totally agree. And from that point of view, basically we got these two targets in. Once that happens, we got these two targets in sight. All right. So if you have any pair in mind, let me know. Otherwise, just wanted to talk about this 21 EMA as I promised in my tweet. And I think it's very strong. If you're interested in this moving average, I can send it to you. It basically changes color depending on the angle. So if it's bullish, it'll be green. If it's bearish, it'll be kind of an orange or purple color. And it just quickly shows, the momentum and trend. And as long as these two are aligned, the 144 and 21, you got a great trend going on. And if the 21 is green or orange, that's basically, the momentum. The 144 is the trend. So as long as this one, the momentum is on your side, I think it could be great trading. So at this moment, you see the euro out already making a bit of retracement right here, putting the 21 in orange. And how far these retracements can go really depend on a lot of factors. You can see sometimes they're short, sometimes they're longer. So that's why always retracement trades, even the 21 EMA is down, can be risky if the 144 is pointed up. So that's why I like to use both. I think they're a good tandem, a good duo. And you can see that things are set up for the upside at this moment. But due to the divergence, I would be cautious with that. We got clear resistance line here and support line coming in here or here, and that's even broken already, like the Aussie. So I think a move back actually to the long-term moving average makes a lot of sense because of the divergence. Actually, that would be the target of the divergence. So a move back into this support, I think, under your odd makes sense. Similar to the pound odd, in fact. So those two are synchronized. Last week we spoke about the pound CAD too, by the way, folks, and I was doing wave counts. Remember on Wednesday that this could be wave 4 and a bounce off the 50 fib, or the other trade idea could be the breakout above this top up to these fibs. So that worked out fine, folks. That worked out nicely, as you can see. And indeed, we got the bounce at the fibs and we got the breakout. So what now? I remember that. Now let's take a look at the daily chart. And you can see that with that, we're getting a breakout. We're seeing a bit of a hesitation here at this moment. But we have the 21 EMA pointed up, so this could be enough maybe to get a bigger correction. We have, excuse me, we have hidden divergence here, and we see prices reacting to that. So there's no divergence between these tops. So a bit of correction and continuation seems not unlikely. Bit of a channel here. If that channel breaks, we might get that correction. Something like that. An ABC zigzag could take place here. If we put a fib on that, then these fibs could be bouncing spots. Now, it's not to say that there could be not one more push up before we get that retracement. So anyhow, I guess what currency pairs so far are the most interesting to me. So, wait. First, we have to look at euro yen and pound yen. Well, I'm pausing here because I don't see anything that's really interesting at this point. So I think maybe I'll keep it simple. I mean, and just skip it. I mean, first step is to look what is the trend. And can you really see what the trend here is on the 4-hour chart? Well, it's a coin flip, really, isn't it? There isn't really no trend. I mean, it's kind of yucky looking, to be honest. Yeah. I mean, it's a lot of momentum up and down, and had some breaks here, very steep trendline breaks. Maybe we can use this one. So perhaps from that point of view, a hook back from upside could still be interesting. But All in all, it doesn't really look that spectacular. All right, euro yen, same story really. We got support here. We do have resistance coming in like this. Kind of a bit awkward looking pattern within those big lines does not seem interesting. So no, I don't know. I would just probably just skip that for the moment. Sorry. So what pairs seem the most interesting to myself? Well, I think that the euro dollar and pound USD just look interesting at the moment. I mean, we got clearly momentum on those pairs to the downside on the daily chart. Let me scroll over to those. This is showing momentum, right? So I think that's fine. I think that the 4-hour chart just needs to get back into some momentum. 4-hour chart is showing a pause. So, either it bounces at resistance or breaks out, or it's a breakout, who knows, right? But at the moment, there is no momentum to the downside. I'm still waiting for that to continue. So either it breaks out or it bounces. That's the pound. Now, the euro dollar doesn't have momentum either at the moment, right? So that too, looking for a break or bounce. We have momentum on the daily. We don't have it on the 4-hour. That's just going sideways. All right, so I think those two are interesting though. Now, dollar yen, I would say, it does have momentum, but as I said, I would like to see a bit of a retracement first. Now, that retracement has not happened yet. In fact, we had a small bull flag, which is not the one I was looking for, and now it does seem to be pushing higher. Well, that's unlucky for me, but I was looking for a bull flag, but not on the 50. To be honest, I'm looking for a bit higher time frame, like the hourly, just because there is divergence between these tops. So yeah, the dollar yen does have momentum at the moment to the upside, but I'm waiting for a retracement. All right, other pairs that might be interesting. The Aussie at this resistance zone. Kiwi breakout. But the most interesting, I think, at the moment are Euro, Pound, and Aussie, I would say. Or the dollar yen if it pulls back or makes a bull flag. Pound out could be interesting too, from this point of view, right here. Do you have a preference? What is your favorite currency pair for this week? Do you have a preference? I'm just curious. I wish I could put a poll. Let's see what your opinion is. But I think probably those four. I think if I four, five probably might have my preference, right? Or have my preference at the moment. Well, we didn't look at some of these crosses. I mean, there are a lot of crosses that could be interesting. I don't know, but we just looked at some of them. Oh, here's my email. By the way, if you want to get this moving average indicator, I can send it for free, no problem. It's right there, my email. So you can pause. If you're looking at the video, you can pause it, or you can write it down, I guess, or let me copy it here for you. right there. So yeah, pound New Zealand seems to be breaking some long-term trends as well to the upside. Um, just browsing some of these pairs at the moment. Odd New Zealand is bouncing at support. Oh, seems I was a bit too fast. Let me restart that. In the meantime, let me tell you that Admiral Markets, you can get up to 50% deposit bonus, of course, throughout May during this month. So take a look at admiralmarkets.com, and I think it's you can find the banner actually if you go to my wave analysis at the bottom. You'll find a way there, right there. You can see. Click on that banner, and you'll be led to the deposit bonus page where you can read more information. Right there. We have more webinars, of course, this week. Tomorrow we can take a look at strategy. Nana takes a look at Heikinashi, and Thursday we take a look at fundamentals for the rest of 2016. Let's take a look at some indices and commodities. All right, dollar index, that's a pin bar, right? Very clearly. Bullish pin bar. Obviously, because we see that on all the dollar pairs, so that's not so strange. We see FTSE bearish week. Nasdaq a bit of a doji after a bearish candle. Is this a head and shoulders? If it is, it's a little strange looking one, but it could be kind of like this. With this as support. So let's see. Doesn't have to be though. S&P 500 hanging in here, which shows that there's not much willingness to go down for the moment, right? So that's kind of showing some strength, I would say. But let's see. Support and resistance still intact. So, well, we'll have to see what price does. You know, that's so great about decision zones. If you use support and resistance levels, whatever they may be, Fibonacci tops or bottoms. The great thing about setting up decision zones on your chart, like we did on the euro dollar very intensively, right? And I don't do that intensively for our players, obviously, because it requires some time, and you probably get bored. It'll be too long, and But obviously, you could do that kind of analysis for all currency pairs that you trade, and make up a roadmap like that, and it takes the bias away, right? The thing is that otherwise, if we don't have a clear-cut kind of roadmap, we are just we get swayed into thinking something that is a mirage. We get kind of persuaded by our own thoughts that this trade is a potential massive winner, right? Somehow we trick ourselves into believing something or seeing something that's not there. And by having a roadmap, by having these levels, we take away that bias. And we always have a bias, but we set parameters. By setting parameters, basically, you do structure that to a degree that the bias is really, I would say, manageable. All right, and we avoid chasing the market. We avoid that feeling of needing a trade, the missing a trade, over trading, revenge trading, all of these kind of psychological things too. We avoid with that. All right, so when a setup meets our criteria, we're not second guessing. We're not trading out of a gut feeling, although gut feeling can be a part of it, right? But there's also, a more concrete reason for it. Oil has a down day, bouncing off the minus 272 at the moment. Couple of days already, so I think there's a chance of retracement. Question is, how far can the retracement go? We got divergence between these tops, so I do think oil will make a bit of a retracement. But we do see 5 waves up here, right? So from that perspective, we might see price bounce out to these fibs. So there could be an ABC zigzag. But I think any rally could see basically price head back down again. Now that could be out of the window if price breaks this trend line. Gold is breaking above it, but it's struggling a bit here. All in all, though, I would say that if it makes a bit more downside, it's still bumping into support down in here, so that could still be a bouncing spot, I would say, on gold. So, does anyone use the 21 EMA here by any chance? Just out of curiosity. Does anyone use the 21 EMA? I mean, you could use more than that. If I'm just curious about this specific EMA. As you can see, I use the 21 144. Sometimes I mix it with more 21 EMAs. I can see that I haven't been able to convince Edith as yet. No, that's fine. Everyone has your own, choices, and maybe Edith is using a 20, for instance, so there's not much difference on that. But the reason why I like the 21 is that it sticks to price nicely, but it's still very flexible in its usage. It gives a good reading of momentum, I would say, and especially valuable if one of the things I like about it, if price has been loose from the 21 EMA, and with loose I mean if price has not been touching the 21 EMA for a while, like here for instance. Once that happens, there's a very, very good chance that when price gets back to it, there's a good chance of retracement, continuation, and a break of the bottom. Now, in this case, the bottom had broken, but it took quite a long while. And yeah, we're looking at a weekly chart, so it's probably not the best chart to look at, but you get the point. That's always a very, very strong, the 21 EMA becomes always a strong resistance if price has been away from the 21 EMA for more than 5 candles. The more the better, the more powerful. So let's take a look at, I don't know. Does anyone have? Let's take a look at. You can name a pair. I don't want to give a seem like I'm making a bias here. So you choose a pair, and we'll take a look at the 21 EMA and find spots where price has really moved away from the 21 EMA a lot. Any pair, doesn't matter. Does anyone have a preference? And the point is that you'll see how, once price starts to build areas where you have 20 candles not touching the 21 EMA, that's really where you get some strong respect. Silver, okay, sure. I normally use 21 EMA. I mean, my experience is more related to Forex, but okay, let's try it. Maybe, I wouldn't be surprised if it's the same kind of response. So let's take a look at the hourly. All right. So on this chart, we see a couple. We see here's one spot. All right, and obviously you see once price gets back to the 21 EMA, and then breaks the top. So that was a good continuation. We see another one here, right? And as soon as it gets back to the 21 EMA, which is here and here, we do see some follow through, but not a lot. This is a bit weaker, and it partially could be because there's the fifth wave here, stuff like that. It's kind of ending, so that's something to be aware of. But it didn't totally fail. We got a bit of push through, right? Other spots, well, we had some couple of candles here, right? And we here too. We got the follow through as well. I actually like to use a 21 EMA band for doing this. Let me add that quickly. All right. All right, so we get the respect here in this band. You can see the follow through to the downside. Now, at this moment, on silver, actually, when we're looking at the hourly, we kind of see a similar thing here as here in a way. Uh, they're aligned as well. We, as far as I can see, do not have divergence. So from that point of view, I think there's a good chance that this could become resistance. Now, there could be higher time frame things that might make us cautious of that, but that seems like a decent potential there. I mean, obviously, we do have a long-term moving average here that could be, but I mean, at the moment, for the next day or two, I think there's a good chance. Now, if it takes longer than that, then I would say it's not valid anymore. It's hourly chart. So looking at the 4-hour chart, you can see we had a couple of pieces here where we had a lot of momentum, and here, and in both cases, you can see price retraces back to the 21 EMA and continued. So those are a couple of examples how, once you get good momentum above the 21 EMA, that 21 EMA becomes really a strong support resistance level. And when price, is not doing that, and it's continuously kind of in those 21 EMAs, you get choppy zones like this, basically. Here too, good momentum. Sorry, here. And we get bounces here and here. Now here, you might even say this is good momentum, and that's true actually. So, in that case, we didn't get the follow through. And that's something to be cautious of. Obviously, when you look at lower time frames, there would be divergence. So those are always warning signals. Another warning signal is that if price has a candle like this pushing through it, for instance, if you don't see any wick like here or engulfing twins like here, those are all confirmations that price is indeed stopping at the 21 EMA. Here we didn't have that. So those are the differences. It's not only about price being above the 21 EMA. It's important, but sometimes at the end of the move, you could still get it and have exhaustion at the same time. Especially if the run up has lasted or run down has lasted for a while. All right, folks. Well, that I guess no questions. So all is clear. That's great. We got more webinars. I hope to see you tomorrow. We're going to take a look at the strategy. I want to take one more time, and I hope it doesn't discourage you, but one more time a look at waves. I think that I would just want to finish basically what we did last week because we were looking at waves. I would like to tie a second session to that. So I think it just fits well together. So I just want to do one more, and hope you will join for that. But if not, then we got Heikinashi in the evening and Fundamental Outlook on Thursday. And wish you good trading and see y'all soon. Cheers.